Completing the Accounting Cycle Part 3. We're going to discuss in this lecture the actual accounting cycle. The accounting cycle has 10 steps, and by the time you finish Chapter 4, you have completed all 10 steps of the accounting cycle for at least one company in particular, which is Net Solutions, that they discuss within the text. Let's take a look at each step of the accounting cycle, and then we will discuss some examples of how to identify some missteps in there. The accounting process that begins with analyzing and journalizing transactions and ends with preparing the accounting records for the next period's transactions is called the accounting cycle. There are 10 steps in this cycle. The first step is transactions are analyzed and recorded in the journal. So I like to kind of shorten this down and call it analyzing and journalizing transactions. You analyze the source documents that let you know an economic transaction happened, and then you make the transaction official and you journalize. The second step is to post the journal entries to the ledger. So the official way of saying it is transactions are posted to the ledger, but for the purposes of memorizing, I will take post to the ledger. The third step is to prepare an unadjusted trial balance. You completed this in actually Chapter 2, so Step 1, Step 2, and Step 3 cover Chapters 1 and 2. Step 4, adjustment data are assembled and analyzed. Now, adjusting data, and you learned about this in Chapter 3, sometimes don't always come with a source document. The source document actually came along with the original transaction, and you're just following up with adjustments for these transactions. Many ways you can do this. Most of the time in the real world, anytime I'm doing accounting for a company or I'm trying to get everybody mainstreamed and streamlined, I will create a document that has all the adjusting entries that are to be completed monthly and annually, and I will make like 12 copies of it so that each month somebody can pull out the adjusting entry sheet, complete the adjusting entry sheet, and sign off on it saying they entered those journals, and then that way they can do this month to month. So somehow, whatever your method of madness is, you need to gather the data, assemble it, and analyze it. Step 5 is an optional end of period worksheet that keeps disappearing apparently. This is optional because in today's world it's kind of obsolete at this point with computerized accounting systems. However, some systems will still do the spreadsheet, and you still need to know how to do this on paper. Step 6 is adjusting entries are journalized and posted to the ledger. So step 5, you gather, assemble, and analyze. And in step 6, you're actually going to journalize and then post those adjusting entries to the ledger. Step 7, an adjusted trial balance is prepared. Step 8, financial statements are prepared. Step 9, closing entries are journalized and posted to the ledger. And step 10, a post-closing trial balance is prepared. I will go ahead and let you in on a little secret. Those of you who are actually watching the video will get these bonus points. Everybody will have the opportunity. However, those of you who are watching the video get a heads up for an extra 10 points for your midterm exam. If you can either list the 10 steps of the accounting cycle or put them in order, however it's presented to you, you'll get extra 10 points on your midterm exam for the accounting cycle. Now let's look at this. All together, transactions are analyzed and recorded to the journal. We call this journalizing. Transactions are posted to the ledger. An unadjusted trial balance is prepared. Adjustment data are assembled and analyzed. An optional end of period spreadsheet is prepared. Adjusting entries are journalized and posted to the ledger. An adjusted trial balance is prepared. Financial statements are prepared. Closing entries are journalized and posted to the ledger, And finally, a post-closing trial balance is prepared. Now, that end of period worksheet, again, is optional. However, you have to list it in the accounting cycle when listing, and understand that it's optional, but you will complete it for the purposes of learning this material. The financial statements that are prepared are the income statement, statement of owner's equity, and the balance sheet. And that completes the accounting cycle. So let's take a look at an example exercise. From the list below, we need to identify what two steps are missing. Well, there's step 1, transactions are analyzed and recorded to the journal. There's step 2, transactions are posted to the ledger. It's insinuating that step 3 is adjustment data are assembled and analyzed. An optional end of period worksheet is prepared. Adjusting entries are journalized and posted to the ledger. Financial statements are prepared. Closing entries are journalized and posted to the ledger. And a post-closing trial balance is prepared. Well, right here, step 3 should actually be the preparation of an unadjusted trial balance. The unadjusted trial balance should be prepared after step B, and an adjusted trial balance should be prepared after step E. So we're missing, in this particular example here, we're missing the unadjusted trial balance, and here we're missing the adjusted trial balance. Now, keep in mind the trial balances are just for you as the accountant, for you to prove debit credit equality. However, it's still part of the cycle and must go into the correct order. If you would like some additional practice on the accounting cycle, you can complete practice exercise 4.5a and 4.5b and check yourself with the solutions that are posted in Angel. This concludes completing the accounting cycle part 3. You may continue with your studies.